Well, hello, everyone, and welcome to another exciting episode of Metaverse Express Full Stop. I'm your host, Mona, and as always, we are here to bring you the hottest topics in the Metaverse with expert insights from our special guests. And speaking of special guests, I am so excited to welcome Jared Feldman on the show today. He's the Vice President of Client Experience at Itrust Capital, who's here to talk to us about a very important topic, and that is crypto retirement planning. Oh boy. Jared, welcome to the show. It's so good to have you on.
Thanks for having me. Excited to be here.
Of course, this is a very important topic that we're going to talk about, and something that a lot of us need to be educated on. So I'm so glad you're here, and we're going to get to do that. But before we start, I do want to acknowledge that the content in the video and on Metaverse Express social channels don't constitute as financial advice. Jared is a financial advisor. Mona is not, guys. You're responsible for doing your own research, as always, DYOR, on the information we're going to discuss here today, and seek independent professional financial advice from Jared. And that is why he is here today, so that you can reach out to him directly and make a private consultation, which we're going to talk about that and instruct you at the end of the show. So stay with us. All right. All right. We just had to get that out of the way, Jared.
I totally get it. It's necessary. I guess the first thing that I would point out is I'm a former financial advisor, recovering financial advisor. Kind of yes. Put it. We do not provide financial advice at Itrust Capital either. It's something that, as an IRA provider, working with a qualified custodian, and we'll certainly get to that as we kind of unpack all this. We don't provide any advice or any recommendations whatsoever. Our accounts are all self-directed. So clients reach out to us, they utilize our services, and then they deploy capital at their own discretion. So I think that's just something really important to kind of say at the forefront of this.
We got it out of the way, guys. Now you know. But anyways, I am just really excited to have you here, because I know that you specialize in a topic that is still relatively new and unfamiliar to a lot of people, especially women. And I say women because I have been wanting to focus more on educating women in this space, especially on the topic of crypto investment for retirement. I think that's something that people just in general don't really think about, let alone women. And frankly, I also haven't had any guests on the show to discuss this topic, the importances of it. And I also think because a lot of women or people, first of all, they're not saving, let alone saving for retirement. And also, when you add in the fact that women tend to earn less and live longer and face more career interruptions than men, I think it becomes even more urgent to start educating and talking about long-term investments and cryptocurrencies. So I guess today I want us to educate our women out there, especially on the importance of crypto investments and why they need to start thinking and planning and paying attention to long-term future savings. But before we get started, I want to give you an opportunity to introduce yourself to everyone and tell us about your experience in the financial industry, and also how you got interested in cryptocurrencies.
Yeah, absolutely. It's something I really enjoy speaking about. I think that the reason why I've done well at Itrust Capital is because of my experience in the traditional financial planning realm, right? Because ultimately, I used to work for different brokers and insurance companies that had their own wealth planning practices. And what we'd really do is help individuals and families save any sort of disposable income into retirement savings or any investment vehicles that create tax efficiency for them and their families. So with the main goal being lowering your taxable income during retirement, and lowering your taxable income bracket during retirement as much as possible. It's really, really important that people start planning and focusing on these things now in order to be able to get a really good start when they do retire in the future. So used to work in the financial planning realm. I got caught up in crypto in a really natural way because the main reason why I got weary with the financial planning space in the legacy Web 2.0 system is just because I noticed that different advisors charge different prices for the same product. And for me, that really stood out because we really need transparency when you're saving for financial planning for retirement. We really need for decentralized systems that at least create as much transparency as possible. And therefore, crypto really lured me in. That was really first and foremost was the price discrepancy for the same or similar services. Another thing that really pulled me in was just the Bitcoin being a modern gold narrative. And this is something that I really focus on when anyone asks me, what's Bitcoin? I focus on gold. And when someone first brought home gold hundreds of thousands of years ago, maybe their spouse was like, this is a rock. And they didn't see the value. But ultimately, it became valuable because of supply and demand. And then other metals started to come out of nowhere that tried to compete with gold. Some of them had value, some of them didn't have value, but that was only proven with time as well as supply and demand. And what I really say to people is that Bitcoin and really a lot of crypto in general have similar properties to gold, but do it in a more modern way. It's divisible, it's a store of value, it's transportable, etc. Verifiable is a really important one as well. So that's what I really focused on, and that's what really drew me into crypto specifically.
Yeah, digital gold. I mean, that's the direction we're going. For the purpose of our show, I want to start with the very basics. And I know a lot of people already know what an IRA is, but I want to ask you to talk to us and tell us first, what is an IRA? And then what is a crypto IRA and how does that work?
It's a great question. It's really it's the heart of what we do. So an individual retirement account is something that was invented a very long time ago for the government to create incentives for people to save and plan for retirement. The government does not benefit from people not having retirement savings. The government does not benefit from people having something beyond just Social Security when they're in retirement. So by creating the ability to tax shelter certain investments, you create an incentive for people to save for retirement. So a really good example is when someone puts money into an IRA, whether it's a traditional IRA in which you can take a deduction from your income, or even a Roth IRA where you don't take a deduction, but then you end up having tax-free income from the Roth. The similarity between any IRA is the fact that it's all tax sheltered while it's inside of the account. For example, if you have crypto inside a regular exchange and you put money in and it grows, and then you want to sell because you're up and you want to take some risk off the table, you end up being exposed to capital gains. Whether it's short-term or long-term capital gains taxes, you have that exposure and it's constantly playing into your strategy. Do I sell now or do I sell later? Because of the fact that you're exposed to those gains on the back end. The beauty of an individual retirement account is that you don't have that exposure while you're inside of it. So if someone makes that same sale back into US dollars to take some risk off of the table, that entire capital gain is sheltered. They don't even have to report the trades to the government because that's the point of having an IRA. Inside the individual retirement account, all income and all gains that are liquidated and put back into US dollar are sheltered from any sort of taxes.
Right. So the whole you can't use the funds until you're 59 and a half, that only applies to traditional IRA. It's the completely different scenario with crypto IRA, is it?
Well, a crypto IRA is just like any other IRA. So there's really just four main kinds of IRAs, or really five. It's Roth, traditional. There's inherited. So if you have a loved one who passed one down to you after they passed, there's SEP IRAs for people who are self-employed. Then there's simple IRAs for people who have small businesses. Now, a crypto IRA could be any of those IRAs. So we will have clients who sign up and they'll say, well, I don't see crypto IRA on your site. I only see Roth and I see traditional, I see inherited, or I see SEP. And what we explain to them is that a crypto IRA is just like a gold IRA. or an alternative asset IRA with real estate. There's certain assets that can be put into an IRA, and there's certain providers like us, as well as our custodian, who allows people to be able to leverage those assets within a retirement account. So we just allow clients to onboard with us. They put their money into digital assets, or they can do gold and silver. We have that on our platform as well, and they can just buy and sell. So it's really that simple. We don't have any sort of leverage trading or loans or margin. It's just pure self-directed investing in alternative assets. In this case, it's crypto. We have 30 different assets, as well as physical gold and physical silver.
See, I didn't know that. I thought it was a completely separate thing from traditional IRA. So not necessarily then. Okay.
Correct. And I can even go briefly into the Roth IRA, because I think that you and your audience are going to appreciate that concept.
Yeah. Yeah.
So if you have a traditional IRA, most of the time people take traditional IRAs and they deposit money, and then they take a deduction from their income. So let's say you make $60,000 a year and you put $5,000 into an IRA that's traditional. Well, you can take a deduction. So you can have an accountant, once again, not financial advice, your accountant can take a deduction to lower your taxable income from 60 to 55,000. If you have a Roth IRA, you don't take that deduction. The biggest difference, the money in a traditional, once it comes out, it's taxable. The money in a Roth, once it comes out, it's tax-free. So there's nuance there. The reason why everyone doesn't just have a Roth IRA is because a lot of people fund their accounts with us, with the 401k, with a previous employer. And most of those 401ks are traditional. So they make a traditional IRA with us. If a client wants to turn their traditional into a Roth, they can do a conversion, which creates a taxable event, but it does prevent them from paying taxes in the future.
Ah, I see. Oh my gosh, all my light bulbs are going off now. Okay, this is starting to make sense, because the next question I was going to ask you is, a lot of people who are, are not familiar with cryptocurrencies, or maybe intimidated by cryptocurrencies. They might come and say, hey, I have concerns. Have you seen how volatile crypto is? Can you talk to those people and with those types of concerns about the risks that potentially could be involved in investing in cryptocurrencies for retirement? When you say, well, it can be physical gold or silver, it kind of answers my questions. But if I'm really putting my investment into cryptocurrencies for my retirement, what level of risk am I taking? Is this like a risk? Is this a risk like a volatile stocks, or is it like bonds? What am I dealing with here if I'm new to cryptocurrency?
It's a great question. It's really the question, right? Because it's your retirement money. It's a nest egg for you and your family. And there are inherent risks to putting money into digital assets. I think what people are learning about the world, especially in a week like this week, is that there are inherent risks in any financial asset, period. I think that's a very scary thing, but it's really especially so with digital assets. And we don't like to be shy about the fact that digital assets are inherently risky, mostly because they're so new. Even Bitcoin, which has done the great job with the Lindy effect in terms of lasting the test of time, is still relatively new, right? It's not even a 15-year-old asset. So it's a really important thing to acknowledge that these assets are so new, and because of that, there's inherent risk. So our clients do have, I guess, higher risk appetite than someone who just invests in stocks and bonds per se. So it's really important to keep that in mind. But what I do emphasize to people who express those concerns is that maybe it just makes sense to take a smaller bite of the apple and not put so much of a percentage of your portfolio in digital assets, period. And something that I point out to people is something called the Sharpe ratio. It's SHARPE, the Sharpe ratio. And what the Sharpe ratio analyzes is risk adjusted return. So how much return are you getting on your assets versus the amount of risk that you're taking? And what a lot of people have found, and you can verify this online, is that having just a 1% exposure to Bitcoin actually improves the Sharpe ratio over time for investors. But you have to let time do its thing. If you just get into Bitcoin and you invest and think you're going to go to the moon, so to speak, in 6 months, then it's really not the asset class for you. You're looking at it as more of a gamble. And we don't look at it as gambling. For our clients, they look at it as pure investing. We have clients who trade, they're active traders, but a lot of our clients just buy and hold.
Yeah,
And for those people, they're really acknowledging that you're going into it for an elongated period of time.
that's so
The people,
important.
yeah,
Yeah,
absolutely.
that's so important because, and again, this is not financial advice, but I usually, when I'm sitting with my friends, I share with my friends what I am comfortable doing for me, and what I know if I put my head down at night, that I know to my family I gave good advice. And if that goes sideways, I know I'm at peace because that's something I did for myself too, right? And especially with what's going on right now, it's more and more evident that self-custody, like you said, it doesn't really matter anymore. Self-custody is looking more attractive by the day, right? And I was sitting around, I was asking myself, with what's going on right now, what do I want to hold on to? I may not be able to go get my cash out of the bank tomorrow. So I'm looking at, Bitcoin, ETH, gold, silver, real estate, cash, right? Those are what I have, and that's what I am going to invest in for now. But that's where I feel comfortable. And when I look at that investment, for me, all of those things are long term. Long term, I'm thinking 10 years from now. My 401k is my ledger. I swear it has 401k on it because that's just the direction I see the future going. Can you walk us through the process of setting up a crypto IRA with you guys? Like if folks came and they say, all right, what do I need to do here? How do we start? What's your first step?
There's really only 3 ways to fund an account with us. You can put cash in. People can do up to $6,500 per year if they're eligible. They can do $7,500 per year if they're 50 and over. Another way they can do it is with an IRA transfer. So a transfer of an already existing IRA. Or a lot of people don't even realize that that 401k that's sitting with your previous employer can actually be rolled over into an IRA like ours. And when you're doing an IRA transfer or a 401k rollover, you're not subject to the same 6,500, 7,500 limitations. So that's a really important thing to keep in mind, that the 6,500, 7,500 limitation is only for new cash for your annual contribution. So people will reach out to us, they'll create an account, they'll get money in there, whether it's via cash contribution, an IRA transfer, or a 401k rollover. As soon as their funds arrive, we'll let them know. They can go in and self-direct into the digital assets or the gold and silver 24/7. And then what they do have is the ability to access it whenever they want. They also have the ability to do withdrawals and distributions whenever they see fit. At the same time, what they don't have access to is self-custody, right? Because our platform doesn't permit you to hold your own key. And that's more related to an IRS regulation with having to have a qualified custodian be the custodian for the actual IRA assets themselves, which is more of a feature and not a bug for our platform. If you look at a lot of the calamities, and we won't mention names, but a lot of the calamities in crypto over the last couple of years with exchanges, as well as with centralized lending providers, was the fact that in their terms of service, even in the fine print, it says, unfortunately, that you may not get your money back. And that's because your money is their money. When you deposit money on the exchange or with a lending provider, that is on their balance sheet. It's no longer your money, it's their money. Our platform, because we're an IRA provider, we have to work with a qualified custodian. And a qualified custodian is state regulated, and they have to hold all the assets off balance sheet, which is such an important concept, because that means that there's no funny business going on. And that when you actually look under the hood and look at the fine print, it says that your money is yours and it's yours always. So I think that's a really important concept when thinking about custody. For me personally, I do enjoy self-custodying my crypto, but I also like the idea of leveraging qualified custodians to spread out and diversify not just what I own, but how I own it. You don't necessarily put all your eggs in one basket. And as responsible as people are, you don't necessarily want to have all of your assets in your possession at
No,
all times.
and Jared, sorry to interrupt you. What I want to add to that is we know self-custody because we've been in this space for a very long time when we educated ourselves. Frankly, folks who are coming into this space and they're new, they need help. They're going to need hand-holding. So it's very essential to have those custodians to come in, and it actually makes people feel safe. And they know that their funds are safe. So I think that's very important. You have to have that for folks who are unfamiliar with self-custody, which you kind of answered this question, but I do want to say this question, I've heard your answer before and you kind of answered it now, but it's what sets Itrust, in my opinion, apart from other firms in this space. Can you talk to folks who are watching? What do you guys, and you kind of said it because it's your custodian, how do you guys ensure the security and safety of the holdings? Is it just through what you said, or is it more any other steps that you guys take to ensure that?
So there's a lot of nuance to it. The qualified custodianship is critical in order for us and our custodian to be regulatory compliant to be able to host an IRA of this kind. But at the same time, the digital assets themselves are held with institutional storage providers, one of whom that I really like talking about is Fireblocks, because Fireblocks allows our qualified custodian to perform very, very high level key management, leveraging multi-party computation, as well as cold signers, which allows for a very, very ironclad system. And these are systems that have never been penetrated, that have insurance policies. Now, the insurance policy doesn't cover everything on these platforms, but at the same time, Fireblocks is not a centralized platform. It merely provides ironclad, SOC audited key management. So the SOC auditing is so important because they've been stress tested, and they're stress tested all the time. And our qualified custodian using Fireblocks has to be able to interact with regulators on a semi-annual basis to be able to prove that the funds are actually held off balance sheet and are not being commingled. So the security through a company like Fireblocks is very, very high level. Even BNY Mellon is utilizing Fireblocks for their digital asset storage. And the beauty of a place like Fireblocks is it also allows us to build cool technology, because it's really API driven, to build technology around that product to be able to have secure custody the whole time, but also be able to do other things and build cool features for our clients to be able to use.
That's huge, because if FTX had that, if Celsius had that, there were a lot of companies out there that they didn't do it right. So I think this is why you guys are so reputable, and because you're very transparent and you set in place the right protection for people, and you talk about it. And I think that's really important for you to be transparent and educate people so they know that their investment is going to be safe. But I do want to talk more with our female audience and educate them on the importance of saving and investment. And I think for me, I would share something personal with you and the audience, but it's really the reason that got me here today. And I'm investing in cryptocurrency and how I got this far. And sometimes we go through experiences that force us to wake up, right? And take control of our individual finances. For me, that experience was a divorce, right? And during my marriage, my husband took care of finances and I took care of our home and our family. And I'm sure that's the case in many homes in America and other countries. But when my marriage ended, I suddenly found myself in a position where I needed to learn finances and investing. And honestly, that's when crypto came to me and I started learning. But the whole time I said to myself, why did I not pay attention sooner? I should have started this way, way, way sooner. Can you talk about some key concepts? I know you work with a lot of probably female clients. Can you talk about some key concepts that women, or anyone should understand in taking the first step toward financial freedom and not wait like me? And I wouldn't say it was too late, but not wait until it's too late.
Absolutely. And I think the beauty about digital assets and individual retirement accounts is that it's really never too late. I think sometimes when people feel like they started too late, they have to potentially take more risk with their portfolio, but that's a personal decision that they make. But at the end of the day, it all just comes back to financial independence. And when I think about this topic of women in crypto and women investing, I think about financial independence and just the independence in general that an individual retirement account brings. Because we work with a lot of households. Sometimes we work with husband and wives. Sometimes we work with sons and daughters. I've personally, spoken with thousands of people. So I have that sample size. I've spoken with single moms. I've spoken with self-employed women who are real estate brokers. I've spoken with younger women who are getting their master's or even still an undergraduate and maybe just had a summer job and they made their first contribution into a retirement account. And the similarity is that they have a thirst for education. They want to learn more. They want to be empowered, and they really want to dive into crypto at their own comfort, whether it's all the way in the deep end or just kind of dipping in their toes. And I think that's a really, really important thing to acknowledge, that people have to feel comfortable, and our platform is really conducive for any type of person, but particularly, independent people who want to be able to onboard. The fact that we allow for folks to self-direct assets is really important, but the fact that we provide material, we have education material online, our support page is full of videos that walks you through how you can do this yourself. And we're there to support you along the way. We have a call-in number. It's open every single weekday. People call in for help, but our platform is also meant to be self-service. And I think a lot of people want the power to self-serve, be independent, and to be able to teach themselves how they can go about building their own financial plan. Sometimes that just has a phone call with us. They open up an account, they fund it, they set it, they forget it. Sometimes that entails being a little bit more complicated. Sometimes people want to open up an account. They want to put money in over a few years. And then because a Roth IRA allows you to pull your contributions whenever you'd like, tax-free, sometimes people have to take money out in order to meet obligations or bills or tuition for their kids. The individual retirement accounts all have different rules, whether it's traditional or Roth. Some of them have hardship provisions. So there's so many ways to almost build a bear workshop your retirement planning. And our website is a really, really strong resource for that.
Yeah, and the Web3 community is so tight, and so it's big, but it's small, and the resources are right there at your fingertips. And that's what I love about this community. It's the community that taught me everything I knew in investing in cryptocurrencies. And it's also the thing that I tell people a lot of times in this space, the accessibility that people have to people like you, to founders and builders and creators. We didn't have that in Web 2 or in the physical world. But here in Web 3, people like you and other leaders, they're right there answering all the questions and educating people. So that's what sets this space apart from anything traditional that we've done. I do want to ask you, in advising and guiding women to build their financial freedom, did you ever come across a unique case or challenge or opportunity where somebody had, I don't know, a life-changing experience or something that really changed the status they were in? Just curious.
Well, for sure. I mean, the first thing that I thought of was actually more of the hard times, because I think it's so easy to talk about success stories, right? But what's even harder is to talk about people who have had a lot of challenges, who have been down on their luck, who just refuse to feel sorry for themselves and continue to build and save and create opportunities. So that's always really inspiring to see. But for me, especially with looking at crypto, that's down a lot for a lot of people right now. We still have people on our platform who invested when it was at 5,000 for Bitcoin. So a lot of these people, I remember I was talking with this one couple who took $250,000 and invested in Bitcoin at 5K, and they turned that into a nest egg that allowed them to pay for their grandkids' education and just do things that they never would have even dreamed or imagined doing. I think it's hard talking about that sometimes, especially during a down cycle in the crypto market, because most people got in and they're down and they're in the red on their investments. Now, time kind of solves a lot of things in crypto, so people have to be patient. But what I like to do is remind people about those stories, because the people who invested at 5K and saw it go all the way up to 69,000,
yeah,
and then have rode the wave, we're going to have people who bought in at 20. And then eventually Bitcoin will potentially reach six figures and
yeah,
beyond.
yeah.
And all this price action will just kind of be ancient history. So for people who are patient, the stories can get really, really cool and inspiring, but it just takes time and patience and not feeling like you're gambling in the market. It's just a matter of coming in, seeing something that you think is an opportunity, and then being really patient and then growing your conviction over time. So yeah, we've certainly seen positive stories. We've seen a lot of inspiring stories as well. People just kind of have to have perspective at all times.
When you were talking, I was thinking to say, casinos closed for folks. The volatile, pump and dump and what we went through last year. And I'm glad in a way. And there was no other way. This is a very nascent stage. We're building a technology or the next iteration of everything that we're going to do, from finance to education to how we watch things to how we attend a concert. Everything is changing. And you had to start somewhere, somehow, right? And the bad apples we had to get rid of the bad apples. And the truth is, when you look in our space now, you see the ones who are still here are the ones that are really doing something substantial. But like you said, it's going to take time. We're in it for a long haul. Hey, there are traders out there, they're trading volatile coins all day. That's fine. That's great for them. But if you're new, not a financial advice, it's just so much better to invest in things that are long-term instead of gambling. You can gamble, but why? Why would you want to do that? But anyways, I digress. This is not a financial advice, but there's still a lot of people out there who are intimidated by crypto. How can we give people, you guys have some resources on your website, you talked about that. What are some lower barrier to entries that you can think of for new folks who are coming in and they just don't know which way to go? How do I start this whole process? Can you think of some lower barrier to entries that we can share with people?
I love this one. This is one of my favorite things to answer for people. And every time I answer this question, I always say, we don't provide financial advice, but I do give them some insight into how people approach our platform. Yeah. Because if you want to be on our platform, you value alternative assets that provide as a macro hedge to whether it's fiscal spending, government spending, printing, just general decision-making by people in power in general. Even if you want to get a macro hedge to the fixed income and stock market, that's why people generally stop by our storefront, so to speak. Now, when people arrive, if they just want to get something that is a macro hedge, they can go into gold and silver. We have physical gold and we have physical silver. But for people who want to join the experience with dipping their toes into digital assets, it usually makes sense to look at Bitcoin, right? And why does it make sense to look at Bitcoin? It's the oldest one that has had the most time on its hands, and it's also the most simple. It's very basic, and that's a very good thing because Bitcoin is just there doing its thing, chugging along. It doesn't listen to anyone or anything. It just continues to produce blocks time in and time out. Now, for people who want to get a little bit more exposure to a digital asset that can be programmable, right? So not just have digital money, but digital money that we can program and build cool things on top of. Well, that's where Ethereum kind of comes in, right? It's the second largest and it's almost the second oldest, right? And it's arguably the second most decentralized, and that's just argumentative, right? But if you just want to look at it that way and you want to take a little bit more risk compared to Bitcoin, well, a lot of people do start to look at Ethereum. And then if you're looking at Ethereum and you're looking at smart contracts and looking at programmable money, well, that's what leads you into the Ethereum competitors and looking at something like a Cardano or a Polkadot or a Solana. And then that's where the floodgates really open in terms of the opportunity for people to self-educate and figure out, hey, what do I want to do with my capital? Do I want to take minimal risk and go into gold and silver, which is perfectly fine and really cool, honestly? Or do you want to take a little bit more risk in order to get exposure into digital assets? And we don't really have an opinion one way or the other. We're just here to provide clients access to the digital assets and the gold and silver on our platform. But that, and I hope you appreciate that, gives a little bit of a thought process into what people think when they come onto the platform and try to figure out, how do I deploy my retirement savings in a responsible way while doing it by making decisions on my own, doing my own research.
Yeah, absolutely. And you have to do your own research at this point. Even in the traditional sector, it seems like we're all questioning the traditional sector at this point too, which I really do want to ask you, and obviously we're not giving people advice, but I do want to know, how are you looking at the situation that's happening right now? And when you look at your own investments, are you saying to yourself, damn, I should have had more silver and gold? Or are what are you leaning toward right now? Just the personal friend to friend conversation.
Well, for someone like my father, it comes down to more gold and silver, because you don't have as much risk appetite and you don't have as much of an investment time horizon, et cetera. For me personally, as you can tell by the way that I'm speaking, I respect the gold and silver folks a lot. And we deal with them and are happy to speak with them every single day. In fact, our clients can actually take distributions in gold and silver, or they can take distributions in crypto if they see fit. But for me personally, I just don't have exposure to gold and silver. I don't even really go into too much Bitcoin, just because for me, my interests and my research has really driven me more into the Ethereum and Ethereum smart contract metaverse kind of thesis.
My
And
guy.
I'm a
My
big time
guy.
believer in that, right? I mean,
Yeah.
I will talk to people every day who say really negative things about NFTs, and they'll be like, well, what do you think is going to become of NFTs? And I'll say, well, your government ID is going to be an NFT. Right. So I fundamentally believe in that investment thesis, and I love partaking in it. But I do lose a little bit of sleep over the fact that I could be overexposed. And my money that I put in nowadays, when I do savings from my paycheck, it goes into Bitcoin, just because that's where I am in the cycle. But for me, another part of the cycle, I'll start to diversify a little bit more. But I think that just for me personally, I got a little bit too carried away getting away from Bitcoin, because sometimes you just want to go toward the less risky, less volatile asset. And that's what Bitcoin has really proven itself to be, even though Bitcoin is relatively more risky than gold and silver. So I think it's so important to acknowledge that. And it's so important to really do what you feel comfortable and what you feel passionate about. But, and this is what I'll leave off with, it's even more important that you check yourself and look yourself in the mirror and say, is this really the right thing to do? And constantly question. And even if you feel good and vindicated about what you're doing, constantly question what you're doing and have a healthy amount of skepticism, because the digital asset space and really just the financial sector in general changes every single day. Sometimes it changes the hour.
Yeah, and that's no different than if you were invested in Apple when it was first available, or just any of these tech companies. It's a risk. No matter how you look at it, you are taking a risk. Why don't we take educated risks? And why don't we learn and read about what we're investing in, as opposed to just asking people and doing what they think, because frankly, they don't know either, right? We're just, the best you can do is read and educate yourself. That's what we did. And just, personally, I say that look at the direction of look at where we're going. Look at the direction of technology. We are going toward a digital world. We're going toward building these environments where you can spend hours shopping, going to attending a concert, having your Zoom meeting, meeting a friend, going to an art gallery, playing a game, watching the Olympics that you couldn't be there up close and personal front row. All of these experiences are going to be in these digital environments. And these digital environments are going to require digital currency, right? So it's just you and listen, not everyone is going to be early adopters, and that's okay, right? And there are risks to being early adopters. But the least you can do is do your due diligence and read and educate yourself. So when you're ready, then you can jump in, right?
Yeah, absolutely. Everyone has to take their time.
Yeah.
Everyone has to march to the beat of their own drum, period.
Absolutely. Well, Jared, lastly, most of my guests, when they come on my show, there's this question that I ask them, and that is their why. Because oftentimes, especially in our Web3 space, we focus on the what. What are we building? What are we doing? But seldom do we talk about the why. Why are we building what we're building? Why should we care? Why is this important, right? So I want to hear your why today. First of all, on a macro why do you work with Itrust Capital? And then on a personal note, why do you want to help people? Why do you help people every day and encourage them to look at cryptocurrency and invest in their future in that way?
Great question. I really like using the analogy of Web 2 is where I came from. It's where we all came from. The bridge for people who are in Web 2, who only dealt with Web 2 finance, and helping them learn and on board to come on to Web 3. So for me, that's such a huge part of my why, because as much as we all love talking about democratizing finance and providing decentralized, autonomous, transparent systems, I really like focusing on the fact that so many people need help getting from Web 2 into Web 3. So I love being there just to kind of onboard people and answer their questions about what it is that we do, but more importantly, what is it about crypto that makes it such a good use case to start to diversify your self-directed investments. And I think that's just so important because there aren't enough people who are waiting behind for the Web 2 people to make sure that they understand where they have to go, point them in the right direction, give them, where to go and really how to understand the space. So before, I get fully into Web 3 and potentially, join forces with a company that is purely on the blockchain, I really love the fact that I'm planting my roots with a company like Itrust Capital that really allows me to serve as that bridge from Web 2 into Web 3.
Well, we thank you for sharing that. We're happy that you are here and you can educate us and moving forward too. What is the next step for those who are learning and watching and want to take that first step? How can they come see you?
Well, I would recommend going to itrustcapital.com. We have a plethora of resources for people who want to be able to watch videos and learn about our platform. They can create an account. They can start to onboard, learn about the process, and really see if this is the right thing for them, right? The minimum to open up an account is $1,000. So sometimes it just makes sense for people to start off with the minimum and really get a feel for it. And then we make it really easy to deposit additional funds. So going to itrustcapital.com is a really good way to start. They can find us on Twitter, right, at Itrust Capital. And then I have the Itrust Jared Twitter profile that I like to respond to different clients who try to reach out to us on Twitter as well. So we have plenty of resources out there. I would encourage people to go to itrustcapital.com for sure.
And Jared is right there in the DMs to answer any questions you may have. Jared, thank you so much for sharing your wealth of knowledge today with us on cryptocurrencies, on retirement planning, and so much more. And just teaching us why we need to start looking and considering cryptocurrencies for our long-term retirement planning. So thank you. And I hope all of you watching at home enjoyed our discussion tonight. Remember, Metaverse Express and Itrust Capital don't provide you with financial advice. Make sure you do your own research and seek independent professional financial advice before making any investment decisions. Thanks again for tuning in tonight, and we'll see you again soon with more hot topics in the metaverse. I'm your host, Mona. Until next time.